Good morning. Hello, everyone. Today, we are going to see a very basic and interesting option strategy. By using this option strategy multiple times, we book the decent profit in different stocks. So today, we are going to implement this strategy in the stock name called Icicipruli. Before we go and dig deeper, if you're just new to this channel, I would ask you go and watch the entire video and leave your comment in the comment section. If you feel in this video will help you in some way, please don't forget to click the thumbs up button as well as the subscribe button. So we don't want to waste our time further. We will start the session immediately. My name is Shiva Gurunathan. Welcome to the D Street School. I'm going to with you for the next 10 minutes. So before we go and start the session, so first let me give you the overview, what kind of the concepts we will see here. First, we will go and start with the technical analysis. I'm sure when I say the technical analysis, you guys are familiar with the candlestick chart, indicator, support and resistance, open interest concepts, everything. First, we will go and find the direction of the stock, how that stock is going to perform and perform on upcoming days, whether it's going to be bullish or bearish or it's going to be traded in flat market. So once we found the market direction of the stock, we will go and customize our option strategy. Once we're done with the technical analysis, then we will go on find the trading range of the stock. We say that historical volatility analysis. So when I say that, that will be very helpful in a lot of way, because once we found the trading range of the stock or index, it will be very easy to customize our option strategy. Once we're done with the volatility analysis, we'll go and see basic concept about this option strategy. Here I used bear put spread strategy. We'll go and see the thought process behind that. Once we're done with that, finally we'll go and see the strike price selection. So what strike price I have created this strategy, because strike price is a very crucial part when come to the option trading. So the profit and loss will be variance according to that strike price selection. So this is a very important concept. So first we will go and start with the technical analysis. So what you are seeing on the screen is the Icicipruli daily chart. So before we go and discuss anything in detail, so I found there will be a very strong resistance at the area 700, because the call options still there will be a lot of call option sellers in the range, price range around 700. So there will be a lot of resistance. You can also see on the see in the chart. On Thursday, Wednesday, there will be a good bullish candle, but on following day, Thursday, there will be an engulfing. The Thursday candle closed below the Tuesday open area. So you can see that this is the close price of the Thursday candle, and which is lower than the Tuesday open session, which it clearly shows there will be a strong resistance in that particular area. So buyers are not interested, sellers are very enthusiastic. That's the reason they push the price down. So what I'm expecting, the price will come till 680 to 660, that range. So this is what I'm expecting. So I come to the conclusion of moderate bearish view on Icicipruli for our next trading session. I mean next 5 trading session. So this is my view, technical view on Icicipruli. Then we will go and check out the statistical view on Icicipruli. So this is the last close price of the Icicipruli, 696 rupees 70 paise. So these are the 5 days historical volatility level. So you can see on the screen like R1, R2, S1 and S2. This is not a typical support and resistance. Actually, this is a standard deviation 1 and standard deviation 2. In order to understand easily to the layman, so I named it as a R1, R2, S1 and S2. Let me quickly explain the thought process behind this volatility range. So the R1 and R2 is a standard R1 and S1 is a standard deviation 1. So what is standard deviation 1? As I said before, this is a statistical concept. So as we know very well, what is mean by the volatility. So what is the purpose of finding the historical volatility range? So here we are interested to find the trading ICC Proli trading range for next 5 days. When I say the standard deviation one, I can tell you a 68% confident ICICI probably will trade from the range of 675 to 732. So the remaining 32% chances ICICI probably might not trade within this range, which means that there will be chances it might trade outside of the range, either upside or downside. So this is the standard deviation one. In case if you do not want to take any chances, you can go for standard deviation 2, which is R2 and S2. You can find the range. So which means I can tell you 95% confident ICICI Proli will trade within the range of 649 to 762. So that will be a huge range. And what I would recommend you initially go and stick with standard deviation 1. So once it breach the standard deviation 1, then you can go and opt for standard deviation 2. And I have given in the daily volatility in percentage. So what we can expect from ICICI Proli for next 5 days is 4% volatility we can expect in next 5 days. This is what we can expect from the ICICI Proli from statistical point of view. So let me go and explain the strategy behind the bear put spread strategy. So what is bear put spread strategy? So I'm sure you might have found, so what I'm going to tell, because already I have done with the technical analyst. When you opt for the bear put spread, so your market view would be moderate bearish. So as we analyzed ICICI Proli in detail, so we came to the conclusion it's going to be a moderate bearish for next few trading session, which means next few days. So that's the reason I opt for bear put spread strategy. So if market works our favor, so as we predicted, if market come down, so what would happen? So we will be stopped with the fixed profit. There would be unlimited profit in this strategy. So our profit will be fixed. So at certain point, so our stop, our at certain point, our profit will be curbed. For example, if the prices reaches 670, so we'll be booking a profit of 19,000. Though if prices reach 600, our profit will be stopped with the limit of 19,000. And if market goes against our prediction, so what would happen? Our loss will be limited. So that is the specialty of this strategy. We will be uh, we will be stopped with the fixed profit, and we will be helped with the limited loss. So if you go with an naked position, there will be a lot of chances you might end up in losses, and moreover you will be lose your entire premium. So instead of that, if you go and implement this option strategy, your loss will be limited. So that's the reason I'm recommending you to go and use a strategy instead of taking a naked call. So this is a two-leg strategy which I used in put. One is a long put at ATM, another one is a short put at deep OTM. So ATM is the at the money, OTM is out of the money. So I'm sure you will have some basic understanding about the beer put spread. Let me go on explain about the strike price selection. So this is a strike price selection screen. So as we expect, as I said, this is our expected volatility, 4%. So this is a two leg strategy. So I bought one long put and one short put. So I initiated the long put at 690 at the strike price, I initiated the short put at 670. As I said, this is the ATM and this is a deep OTM money. So when I go and initiate the long put, so I have to pay a premium, right? So that would be 20 rupees 25 paise. So our target day would be 5 days. So when I initiate the short put, so I'll be receiving the premium. So how much I'm going to receive? 13 rupees. So our net debit would be 7 rupees 25 paise. So simple. When we go on separate this 13 from this 2025, that would be our net debit, which means this is our maximum loss we incur in this trade. So we will not lose more money. As I said, our loss will be limited. So that would be at 10,870. So and what would be the breaking point? Breaking point is at 682.75, which means when the prices go below this price range, this when prices goes below this price, we will start booking the profit. So what would be the maximum profit when the price reaches 670? That would be our maximum profit of 12 rupees 75 paise on the premium, 19,125 rupees on INR. So our target price would be 670 and entry price would be 690. Current market price would be 696.70. So I would recommend you to go and initiate the trade in 690. So this is a unit. We have got a 1,500 units. So this is the overall my perception about this option. I hope so. This will the target will achieve in couple of days too. Let us wait and see how Icicipruli will perform on the upcoming days. So this is all I wanted to say now. If you would have any doubt, don't hesitate. Please leave your comment in the comment section. So I'm glad to clear all your doubts. So as I said before, if you like this video, go and click the thumbs up button. Please don't forget to subscribe this channel, and people who are giving continuous support to this channel, I'm greatly thankful for them. So thank you very much. We will see you on next video.